Hi everyone. Okay, so we left off from the first part with just finishing up the investing activities. We finished the operating activities as well. So we added them all together. So including in the operating activities was profit for the year of 125,000. We had to add back the depreciation because depreciation doesn't affect cash. So basically what that means is our cash profit for the year are these two added together. So cash profit for the year was 225, and then on our statement of income we had to also subtract off the depreciation, so that's why the profit on there just showed 125. But if we're talking about a cash profit, it's those two added together. And since we are reconciling cash, that is what we need, is the cash profit. Okay, so then we had to look at our non-cash working capital. And if you remember the other day in class, I mentioned that our working capital, the formula for that is your current assets minus current liabilities. So non-cash working capital are all of your current assets, except for cash, minus all of your current liabilities. So we had to add in all of our current assets. We had inventory, trade receivables, and marketable securities, and we had to include our current liabilities, which included trade payables, accrued expenses, and short-term borrowings. And then we had to figure out what direction those changes went. Okay, so we looked at, for example, just to reiterate, for inventory, it went from 200,000 up to 300,000. So that asset increased by 100,000. And if an asset increases, cash decreases because we had to pay for it. So to get more inventory, we had to give them cash. So if inventory went up by 100,000, cash went down by 100,000. And then our trade receivables went down, so cash went up. And our marketable securities went down, so cash went up. And if we look at our payables, our payable went up. So looking at our liabilities, if liability increases, cash increases. So our trade payables went up. So therefore our cash went up. Our accrued expenses went down. So cash went down. Our short-term borrowings went up. So we borrowed more money. Well, what did they give us? Was more money. So therefore we have more money. So our short-term borrowings went up by 80, so our cash went up by 80. Okay, so that's what we've got included here. And then adding it all together, saying that cash from our total operating activities is 265. This is the change in cash that occurred because of all of these operating activities. So this is saying that because of our operating activities, our cash went up by 265,000. Now, our investing activities, we had talked about property, plant, and equipment, and that because of that, our cash went down by 300. So let's go have a look. So we've got our property, plant, and equipment. It was 1.7 million. It went up to 2 million. Well, it went up by 300,000. So if we bought, say, a building for 300,000, we had to give them cash. So if that asset went up, our cash balance went down. Intangible assets, they went up by 100,000, so our cash had to come down. So we'll come back to our statement of cash flow. So because of our investing activities, because we invested in property, plant, and equipment, our cash went down by 300,000. Because we invested in intangible assets, our cash went down by 100,000. So the effect that our total investing activities had on our cash balance is our cash went down by 400,000. Okay. So the one section we have left is our financing activities, and the way we finance stuff in our organization, mostly long-term assets, the way we finance them is either by selling more shares, and if we sell more shares, then sometimes we have to pay out the dividends. So those are the two things that come from the equity financing ability. And then the other way we can finance is through long-term liabilities, such as long-term borrowings. Okay, so let's go look and see what happened with these. So we'll go to our statement of financial position. We'll go down to our liability section where our equity is as well. So our long-term borrowings, we went from 600 to 700,000. So therefore our long-term borrowings went up by 100. Well, how did they go up? Well, they must have given us cash, right? If we owe an extra $100,000 now, it's because they gave us cash. And again, your rule is right here. If a liability increases, your cash increases. So we're going to bring that over to show what effect it had on our cash balance. So long-term borrowing, because of that long-term borrowing increase, our cash increased by 100,000. Okay, so let's go look at share capital. Okay. Oops, sorry. Here we go. So share capital, our share capital went up too. It went up by 50,000. Well, if we sold $50,000 worth of shares, then we must have had, they must have given us $50,000. So we're going to add that in. So we're going to come back here and say share capital. Because we had an increase in share capital, we now have an extra $50,000. Okay. Dividends. Let's go look what happened to dividends. So for dividends, we want to go over and look at our statement of retained earnings. We paid out dividends of $25,000. So we have to take that into consideration. So if we paid dividends of $25,000, well, we gave them cash. So if there are dividends declared and paid in a year, then that means our cash went down. So I'm going to go here, 25,000. Okay, so for our financing activity, our three items that are there are capital shares or money from selling shares, paying out of dividends, and any long-term liabilities such as long-term borrowing. So our total effect on cash from financing activities is $125,000. Okay, so we're done, hopefully, but we need to make sure we balance so that we know we took everything into consideration. So we need to add together the total from our operating activities, the total from our investing activities, and the total from our financing activities. So I'm going to go equals, plus, plus. And it's saying that the change in cash for the year was a decrease, it's negative, so a decrease of $10,000. Well, I can figure out if I'm right? Because all I need to go is I'm going to go here and add in my, oops, wrong place for the formula. So beginning cash balance, I know what that is. So I'm going to go equals, go over to my statement of financial position. And my beginning cash balance, so last year's ending balance, which was this year's beginning balance, is 30,000. So I know that if the change for the year was negative 10, I started with 30, then if everything in the statement of cash flow is correct, then my ending cash balance should be 20. Let's go look and see if I'm correct. So I'm going to go to my statement of financial position. I'm going to look at my this year cash balance, and it's saying 20,000. And this is saying the ending cash balance is 20,000. So I'm correct. If you have any questions, let me know. Thanks, everyone.